In my experience, the most egregious, the most gut-wrenching, and most overlooked failure in personal finance is actually this: not protecting your family with adequate life insurance. We need to remind ourselves that how to invest is in its entirety a secondary concern. The most fundamental, critical issue in financial planning can be summed up with one question. Do you know exactly what would happen to your family financially if you didn't wake up tomorrow morning? Welcome, everybody. If you live anywhere near here, Dedham, Massachusetts area, chances are you've heard about the Karen Reed trial. It's really dominated local headlines for some time, dinner time conversations, group texts, especially here where the crime took place right in our backyard. So here's a quick overview. So Karen Reed stands accused of killing her boyfriend, a Boston police officer, John O'Keefe, by allegedly backing over him with her SUV after a night of drinking. But the story gets a little bizarre from there because O'Keefe's body was found outside the home of another Boston police officer where the group had been drinking there that night. And yet, despite the very obvious fact that the house was never searched, not once. Let that sink in for a second. A man dies. The scene of the alleged crime is a cop's house where everyone had been hanging out. And not only was the house not searched, but neither were its occupants interviewed with any real scrutiny. In any other case, the home would, that's the first thing that would be investigated, right? But here, not so much. And whether you think Karen Reed is guilty or innocent, the fact alone, that should give you pause. If we can agree on anything, it's that failing to search the scene of a suspected murder is an egregious, almost unbelievable mistake. And one that, of course, raises some serious questions about intent, competence, probably both. So it got me thinking. As financial advisors, we often talk about biggest mistakes clients make. Ask around and you'll hear the usual suspects, right? Not saving enough, or starting too late, or pulling out of the market during the downturns. These are all valid, all common. But I think those answers miss something. In fact, I think they miss the thing. Because in my experience, the most egregious, the most gut-wrenching, and most overlooked failure in personal finance is actually this: not protecting your family with adequate life insurance. It is, in every sense of the word, the equivalent of failing to search the house. Every once in a while, we need to remind ourselves that how to invest is in its entirety a secondary concern. The most fundamental and critical issue in financial planning can be summed up with one question. Do you know exactly what would happen to your family financially if you didn't wake up tomorrow morning? And if the answer to that isn't crystal clear, if it even gives you a moment's pause, then every conversation about investing, asset allocation, retirement planning, that all becomes moot. The pandemic, it gave us a front row seat to, randomness, right? It didn't just claim the sick and elderly, although it focused there. It did come for the healthy and the young and the somewhat invincible. And just as quickly as that fear arrived, it left because we want to move on. But we shouldn't, at least not entirely, because if COVID taught us anything, it's that tomorrow isn't guaranteed. That protecting our family financially is not optional. It's actually priority one. And for most people, that means taking a serious look at your life insurance. You might have something in place. That's great. But is it still the right fit? Did you set it up 10 years ago when your income was half of what it is now? Has your family grown? Have your goals evolved? Do your beneficiaries still match the plan that you claim to have? Because here's the truth. Most life insurance policies are outdated. They're either too small, incorrectly owned, simply misaligned with one's current needs. And worse, they go unchecked for years because, frankly, they're not really as exciting to talk about as the markets, the models, what's going on. But nothing, absolutely nothing in your financial plan is more important than this. And there's a saying I often come back to. We insure against what can go wrong so we can invest for what can go right. It's not about being morbid. It's about being responsible. It's about being a grown-up. And if you truly believe in planning, you don't just plan for the life that you hope happens. You have to plan for the one that might. And as advisors, if you haven't had this conversation with every single one of your clients in the last 12 months or so, then you're the investigator who forgot to search the house. You make the call, you book the review, you ask what can be somewhat of an uncomfortable question. If you didn't come home tonight, what happens to the family next? And despite the fact the client might squirm a little bit, they might deflect, that question has the power to save families from financial ruin. It has the power to anchor everything else that we do. Investments matter. Absolutely. Taxes matter. Estate planning matters. But none of it means a damn thing if the family is left to pick up the financial pieces because we, as advisors, we're too squeamish to talk about death. Let's not make that mistake. Let's all of us be relentless. Have a great, great week, everybody. Thank you.